I want to share with you guys 4 things that I think are absolutely critical to trading the stock market consistently well. Now, there are all kinds of different styles of trading, so these are just the 4 things for me that I would say are non-negotiables if you ask me how to be consistently profitable. So the first one is being aware of support and resistance and retracement on extended time frames, specifically when your candlesticks would represent one full day of trading. So a 1 year, 1 day chart or a 3 year, 1 day chart. There are so many times, more than I could possibly count or remember, where the overall market was trending in one direction and there's this one stock or 2 stocks in my watch list that are just doing the opposite, or perhaps their price action is consolidating on the day. And when you dig into it, you look a little bit further, usually it's because it met up with a longer term support zone. And there's been so many times where I've seen a stock bounce almost to the penny on like a 23.6 all the way up to the 38.2, and it gets rejected on that next Fibonacci zone, and it's filling that gap for the day. It's challenging those 2 price points on the day, and it's almost so simple sometimes. And when it catches you off guard and you don't realize that it happened, it could be very frustrating. So you don't want to be stuck in a trade or trying to trade with the overall market and unaware of these zones. Personally, I keep them plotted on everything in my watch list, and so I'm aware of them no matter what I'm trading throughout the day. The second thing that I think is absolutely critical is doing your homework in pre-market. Now, I've seen so many trade gurus come out with videos saying, I trade for 20 minutes a day, I jump on when the market opens, I take my trade, I'm done 10-20 minutes later, and I'm out for the day. That is too good to be true. It's simply not the case. The traders that I follow who trade consistently well and share their trades with you, they show you their trades, they are in pre-market, usually an hour at least before the market opens. Start looking at what pre-market price action is doing. Is it testing certain levels from the previous trading session? What was the volume like in the previous trading session or in pre-market? Look at your news feeds and try to see if there's anything that is going to be pushing the market in one direction for the day. Now, one resource that is always helpful in Thinkorswim is their news feed, which will show you any updates on any stock that you're looking at. It's handy to pull up, and I've found that a lot of times it shows you things that you don't find in a lot of other resources. Another one that I like a lot is with Seeking Alpha. They come out with an article every morning called Wall Street Breakfast, and in that article they'll tell you a lot of what the catalysts are expected to be for the day. They'll tell you stocks that are having notable earnings reports, and they'll also go over any economic events around the world that you should pay attention to. And so it's really informative and it's a quick, easy read. Benzinga.com is also a really great resource. They not only post headlines for the day, but they post upgrades and downgrades, and they keep things pretty up to date, which is really nice. But all in all, with their news feeds, I find that they are usually the pretty big catalysts or the pretty big stories for the day. And so it's a great resource to check and see what are the big things that you should be paying attention to. You can usually find those right in their news feed. And one last important one that I look at every single day is the economic calendar, which you can usually find on Market Watch. They'll post things on there like economic data that's expected to be released, what time of day it's expected to be released. They'll also tell you if there is one of the Fed presidents expected to speak, and that is critical to know because every time a Fed president speaks, no matter what it is, usually the market will react. And sometimes it's not very much at all, and sometimes it's pretty drastic. Sometimes that price action resets very rapidly and sometimes it doesn't. But all in all, I personally don't trade when there is a Fed president speaking because it is impossible to know how the markets are going to react. It's always important to know when they're going to be speaking and what time of day. The third thing that I would like to share with you, and which I think is definitely a non-negotiable for me, is building your positions correctly around support and resistance zones. Now, new traders, what they typically tend to do is buy directly on support or short directly on resistance. Now, why wouldn't they? They put all that work into finding those critical zones and they don't want to miss the opportunity, right? Well, you find when you've been trading for a while that those zones typically cause market volatility and price can dip below the support zones momentarily or for a while the reversal is trying to develop. And so what you should do is allow the stock to dip below those zones, and once they do, build your position slowly. That will give you much more composure in the trade, and you will sit back and let the reversal develop over time. If you are going all in on the penny right at support and that volatility kicks in and the trade isn't going your way right away, it is much more stressful and you're more likely to close that trade at a loss because you don't know what to expect. And you'll find that once that trade starts to play out for the rest of the day, a lot of times you were right. You needed to put more time and patience into it. So have patience when you're building a position and try to get below those support zones a little bit and add to your position slowly. The final thing that I want to share with you is building your intuition as a trader. Now that means signing in every day at the same time and doing the same thing. Checking the same resources, looking at your stocks to see how much percentage it's giving up in pre-market or how many percentage points it's gaining in pre-market. What zones or retracement support and resistance zones are the stocks testing in pre-market? Is SPY down 0.4% or is it down 1%? And what are the catalysts out for the day? Putting all this information together so that you get a better idea and more confidence going into the market open on how the market will be trending for the day. Now, when you're consistent and you have habits that you do every single day, that is what builds your intuition. And many times you're going to find that information saves you. And when the stock market opens up, stocks sell off and maybe they meet a critical support zone, by the information that you've going into pre-market, your intuition might tell you, hey, even though we're at the support zone, this is not an opportunity to buy because the market has a lot of downward pressure. And you know that and you understand that through doing the same thing every day, looking at the same things every day, and understanding how things typically move. You have to build your temperament and learn what the market's temperament is as well. And that will build your intuition over time and help you to be more consistent and make smarter decisions. So those are the 4 things that I would say are non-negotiables if you want to be a consistently profitable day trader. So stick around, check out some other videos on my channel. All the trades I show you, I tell you everything that went into them. I don't hide any information. I want you guys to learn as much as you can. Keep watching videos and sharpening your skills and growing with this channel. I'll see you in the next one.